Everybody, it is Tuesday, June 1st, 2010. Let's take a look at the S&P 500. It did lose $1.84 today, or about 1.68%. And you can see that volume was once again trailing off here. So that's 3 days in a row where we've had lighter volume. And people were complaining, well, it was up on light volume. Well, today it was down on light volume. And it remains a trader's market. And the only thing that pays is price. So you have to be paying attention first and foremost to price, obviously. That's the point that I try to make when I say only price pays. But the S&P 500, as we know, last Tuesday gapped lower and then traded a little bit below those January lows, 20 cents below the January lows, and then began to recover. Well, the market got right up to that 200-day moving average and this prior little level where it tried to find some support, and then began starting selling, to kind of consolidate in there. And today we sold off. Now this 5-minute time frame shows the last 5 days. So since that May 25th gap lower, in other words, the market rallied that day, and then we had a little bit of more volatility in here. But what we see here is this gold line. This is the volume weighted average price since that day. So it's calculating all of the shares that trade at whatever price they trade at and coming up with an average. So the average is right now at about 108.45. That's the volume weighted average price since that market apparently made a lower low that a lot of people thought was going to be a successful test, and that we could bottom from there. Well, right now what this tells us is the psychology of that move. So since that May 25th gap lower, the average participant who has purchased the S&P 500 is now down about 90 cents or so, because the stock, the market closed at 107.53 and the average price is up here at 108.44.45. So we look at it and we see that support was broken and that 5-day volume weighted average price was broken. So if this market is going to attempt another recovery, maybe there's going to be a catalyst that gets big volume to the upside. It seems highly unlikely, but our first obstacle is going to be about 108.50. If the market gets up towards 108.50 and then backs away from that tomorrow, then I think you've got a good opportunity for a short sale, probably down towards 106.85 levels, and then perhaps down even back into the 105 area. If that fails to hold, then we're going to be looking at about 103 to 102 from the fourth quarter of 2009. So it remains a very tricky environment here, long or short, because we're getting these gaps up and down and late day reversals each day. So you still have to focus on risk management and knowing what levels players could potentially come in and reverse this market. So when we look at the, since Friday, we've had these lower highs. Today we broke this support and we have the lower low. We're going to need to at least get back above there, and that's also about where we see the 5-day moving average as well. Even if it can get back above that level, it's not going to be easy for this market to rally, because we have this downtrend line that basically came from the May 4th breakdown through that 118.50 level that we were focused on. So we draw a trend line off that. You can see also that's where we have that declining green, or 20-day moving average in this case. So if we get a recovery, we'll take another look at something else in here, which is the volume weighted average price since that May 4th breakdown ties in right around that 112 and a half area. So even if we get this market to turn around, there's not a lot of potential upside. So the risks remain high in this market, and I think it's just more of a trading environment, in particular for day traders. You've got that once again today we had at about 1:32 p.m. we saw the market try to rally, and then it failed. So that 1:30 to 2 p.m. Be very aware of reversals in that time, and then the last half hour, 45 minutes of the day, again today, just real nice trend trading, this time to the downside. So risk management, smaller share size, wait this out a little bit unless you're a very aggressive trader.